All right, everybody, welcome back. Today we're going to be doing Chapter 3 of the Florida Contractors Manual, Financial Management. We're going to be doing everything in one take. Why one take? Because I don't know how to edit videos, but I do know how to pass the test, so let's get into it. Chapter 3 is Financial Management. Now, the thing about Chapter 3 that's kind of interesting is that a lot of the information that we're going to be discussing in Chapter 3, I think is redundant to the information that you're going to find in the Builder's Guide to Accounting. This is really the accounting chapter, and a lot of the information is a little bit in depth. You're not really going to be responsible for knowing everything that you see here. They're not expecting you to be an accountant, but they are expecting you to understand certain concepts. Me personally, like I said, I think the Builder's Guide to Accounting is a better book when it comes to financial management questions. So if I was taking the test, and I did, what I did when I saw any kind of accounting or financial questions, I went straight to the Builder's Guide to Accounting textbook. I find that that book is more comprehensive. I find that book easier to navigate, and that book has a great index. So when I had any kind of questions, I went to that book first. And if I really wasn't able to find the questions in there, I would go to this book. Nonetheless, remember the test is expecting you to cover the whole book, and you are responsible for the information in here. So I'm not gonna get into it in insane depth, but I am going to cover what I think is important. And so let's get into it. Grab your highlighter and let's get started. All right, so we're going to start. The first things that I have highlighted, page 310. It talks about what is bookkeeping and what is accounting. It's one versus the other. You need to understand that they are not the same, that it's bookkeeping versus accounting. Know what each one is. They may ask you that question. What this book really tries to do, at least in this section, it kind of tries to build a story. And what I don't really like is that it's kind of like all jumbled up, all the information in here. So it's not always easy to follow along. But there are, like I said, there are still certain things that I have highlighted that I think that you should really focus on. Most of the other stuff, I think for the most part, you can ignore. All right. So on page 311, we're talking about accounts payable. You need to know what exactly is an account payable. You need to know what a balance sheet is. On a balance sheet, things owned are listed to the left. Claims against things owned are listed on the right. You need to know that. Assets, liabilities, and equity. Things owned by the company are called assets. Claims by others are called liabilities. If you've been to college, you know, if you've ever taken an accounting course, you know that this is probably one of the most important equations that you'll see in accounting. It's kind of like the building block of what they do there, and that is things owned equals claims against things owned, or assets equals liabilities plus equity. Sometimes you may see other terms called owner's equity, but know that that's exactly the same exact thing. Let's keep going. You need to know what an account receivable is, okay? That's this section right here. You need to know what the accrual method is. This method of accounting for revenue and expenses when they are earned or incurred rather than when the cash is actually received or paid. Okay, that's the definition. Know what that is. That was a test question for me. All right, debits and credits. We're on page 320. What I have highlighted here. Debits refer to the left side of an account, and credits refer to the right side of an account. Next, page 321. The act of increasing the account balance of an account that has a debit balance is called debiting. The act of increasing the account balance of an account that has a credit balance is called crediting. Let's keep going. The journal. The journal is a company's primary record of all its business transactions. Transactions are recorded in the journal before they are recorded on the financial statements. Let's keep going. Ledger. For each account, sometimes called the ledger account, the debits and credits that were recorded in the journal and affect the account, the date of the debits and credits, and the ending account balance. That sounds a little off. I'm not really sure why. I guess that's just how they spelled it. They wrote it, okay. Posting. The process of transferring information from the journal to the applicable ledger account is called posting. I don't know if you're seeing what we're doing here, but for the most part, what we're covering is really the definitions of certain terms. And I think that's really what you need to know. That is really key. A lot of questions that you may be asked are literally just definitions of certain accounting terms. So if that comes up, you can readily find that in the index or the glossary, and that'll make things very, very easy. And that's really what I'm trying to do. I'm trying to familiarize you with certain terms that you should be familiar with, because it's highly likely that you will be seeing these terms. Page 329, the balance sheet. The balance sheet categories include current and fixed assets, current and long-term liabilities, and equity. Here it lists assets and it tells you what current assets are. Now the key phrase for current assets as opposed to regular assets is that these are assets, ordinary course of business within 1 year, 1 year or less. Okay, so this is basically short term, almost. Fixed assets, liabilities, current liabilities, same exact thing. Liabilities that are due to be paid within 1 year. So remember, if you see the word current, they're talking about a year or less. Long-term liabilities, long-term liabilities are liabilities that are not due to be paid within the next year, since it's not current. A loan payable in 2 years and a mortgage payable in 25 are examples. So anything over 1 year, whether it's 2 or 25, that's considered long-term. Okay, the income statement. Categories on the income statement include revenues, expenses, and income. Let's keep going. Page 333. What is bad debt? Know what that is. What depreciation is? You need to know what that is as well. Like I said, this terminology is going to be covered way more in depth in the accounting book. So I don't really want to spend too much time on that here, but just know that it is in this book as well, and you can find the definitions for it if you need to. Okay. Then depreciation and taxes, the MACRS, Modified Accelerated Cost Recovery System. Residential rental property is depreciated over a period of 27.5 years. Possible test question. Make sure you have that highlighted. Real estate may now only be depreciated on a straight line basis. Also, another important thing to remember. The MACRS system specifically assigns some types of assets to recovery classes such as autos and light trucks, which are now 5-year property. Okay, 5-year property, that's the key phrase here. When we go down to the next paragraph, when more than 40% of such property is put in service in the last 3 months of the tax year, you are instead required to use a mid-quarter convention. Yes, very, very important and super highly interesting stuff, I know. Amortization of intangible assets. The definition for that is in here. Let me see here, what else do I have highlighted? Okay, the cost of an item is written off in equal amounts over a period of years or months. Okay, kind of the definition once again. Here you have statements, different kind of statements, balance sheets. Okay, closing the books. We're on page 340. Journal entry is made which makes the revenue and expense account balances go to zero. Opening the books, okay, to use a new ledger, Okay, this is the section. You can read it. You can pause the video, read this on your own, or just at another time you could read it on your own. Remember, the highlighting is designed to bring your attention to a certain point in the book. You should be familiar with that area wherever there is a highlight. Subsidiary ledgers on page 345, how and why. Subsidiary ledgers are a system in which a particular ledger account, such as accounts receivable, has its own ledger called a subsidiary ledger. Once again, another definition. Accounts receivable, the subsidiary ledger keeps track of who your customers are, what their addresses are, and how much money they owe to you. It also breaks down the money they owe you by current receivables, overdue 30 to 60 days, and any other period that you might decide to follow. Okay. Oh, I missed something. On page 344, preferred stock, common stock. Once again, just definitions. Page 346, open invoice accounting for payables and receivables. This section describes a method of accounting known as the open invoice method. Instead of merely keeping track of the outstanding balance for each vendor customers, open invoice accounting keeps track of each individual invoice together with each partial payment made against it. This is the section for discounts. All right. Let me see, determining an employee's gross earnings. The most common components of gross earnings include regular pay, overtime pay, salary, tips, commissions, taxable benefits, and vacation pay. All right. I would probably pay attention to this section. I think this is pretty important. I'm not going to read the whole. I'm not going to read this whole section, but I have everything here highlighted because I think it's important. I remember this on the exam. I actually had a question that asked me about components of gross earnings and which one was and which one wasn't. That's the kind of question that it was. So make sure that you could find this because this may be on your exam. All right, let me see here. FIT, federal income tax, liability in the FIT payable account. Let me see, what else do I have here? State income tax. This is kind of an overview. We're going to get into it a little bit more. 353, Social Security tax and Medicare tax, FICA. Forms 941, W-2. That should be familiar because those have been mentioned before. And they're going to be mentioned again. The Social Security tax rate is 6.2% with an $118,500 wage base. And the Medicare tax rate is 1.45% with an unlimited wage base. That means you deduct both Social Security tax and Medicare tax from an employee's check, a total of 7.65% gross earnings. The most important thing I want you to pay attention to is this, a total of 7.65% of gross earnings. That may be on your test, okay? When accumulated gross earnings exceed that amount, you stop deducting the 6.2 amount, okay? Federal Unemployment Tax Act expense, all right? The FUTA percentage rate is applied to no more than 7,000 of each employee's gross earnings, okay? 7,000, that's the key number. Make sure you highlight that. Based on the example employee and assuming this employer's FUTA percentage is 0.06, okay, this is just an example. You may be asked to calculate the tax rate. They may just give you a calculation, and you'll have to use your calculator to get that done. This is just kind of an example of a scenario. You may be given a similar scenario, so don't be surprised if you see a question where they ask it for a calculation. Let me see here. State Unemployment Tax Act expense. First 7,000 earned in a year. If an employee's earnings today do not exceed 7,000. Okay, so this is the state version as opposed to the federal version, and that's the amount. Remember, 7,000. Inventory accounting, FOB, free on board, FAS, free alongside ship, or CIF, cost, insurance, and freight prepaid. I don't remember seeing this on my exam, but I talked to somebody who said they saw it on their exam. So inventory accounting, specifically these terms, make sure you have that highlighted. This you will definitely see on your exam. Accounting control of inventory, FIFO, LIFO, item by item, average cost. These are the accounting control of inventory can be carried out by several methods. These are those methods. Make sure you have a good understanding of what those methods are. I just have the actual terms highlighted, but really this whole section, all of these, you should pay attention to and read and know what they are. All right. This says you must account for state and local sales tax. That's obvious. Uncle Sam's got to get his. Federal, state, city, everything. Everything's going to be accounted for. Page 366, methods for maximizing your business's cash flow. This is pretty important. These are just some tips that they're giving you. It's not like rules or regulations, but these are just tips. They may bring this up on the exam, so I have everything highlighted. Take a few minutes if you need to read these couple pages. I think this is really good general information, and it may come up on your exam as well. So 366 and 367. All right, so that's the first part. Now let's get into the second part, construction accounting. All right, capitalization, types of capital. 4 types: startup, working, expansion, debt restructuring. Pretty important section. I would make sure that I read the next few pages pretty carefully because I think all of these questions are really, these are great exam questions. Starting capital is the amount of money needed to get the business underway and should be enough to cover expenses for 3 months to a year, depending on the type of contracting business. The key phrase here is 3 months to a year. Expansion. To qualify for expansion financing, some programs and financial institutions require that you have been in business at least 2 years, while 5 years is preferred. Key words, key phrase here, at least 2 years, 5 is preferred. So at least 2. Bank financing, more terminology: principal, term, rate, maturity value, single payment loan, ordinary interest loan. Okay, know what these are. We're on page 373. All of this is important. On page 374, you essentially have different kinds of loans: compound interest loan, discount loan, installment loan. It's highly likely that you will be asked to do some calculations. On my exam, I did have to answer questions. I had a question about discount loans, and I have seen other questions that people have had where they ask about the compound interest loan. This is just kind of like the way it is. You will have to, they will give you certain scenarios and you're going to have to calculate certain aspects of the loan. I would make sure that I am very, very comfortable with the information that is in here. At some point, if anybody needs me to put a separate video together where we're doing calculations for compound interest or discount or installment, we can do that. But at the moment, I'm not gonna do that. Just understand that on page 374, that information is all there with examples. So read this, follow it along, and if you have any questions, please put that in the comments and we can go over that. On the bottom of 374, more definitions: common stock, preferred stock, estimating process. The estimating process will vary from contractor to contractor, and the method used is not important as long as it produces a good estimate without taking excessive time. Okay. Now we're on 377. Many contractors can determine the quantity and actual direct labor costs involved in performing a task, the quantity and the direct material costs required to complete this task, and the cost of subcontracting certain tasks which the contractor will not perform. In the middle of 377, the system should treat each contract as if it is its own separate construction company. Types of contracts. On 378, very important. Multiple questions about contracts, and there'll be more about contracts further along in the book, but this is pretty key I would make sure, like I said with a couple of other sections in this chapter, make sure you can find this information easily. Make sure you know what this is. I'm not going to read everything, but 4 basic types of contracts: fixed price or lump sum, unit price contracts, cost plus, and time and material contracts. Fixed price contracts, they're going to go over everything in every section. And you can pause this video and just basically highlight everything that I have highlighted. But in reality, that most of the stuff here is very, very important, and you should be very familiar with all of this stuff. Unit price contracts, number of cubic yards of dirt at a given price per cubic yard. Cost plus contracts may also contain a ceiling price, time and material contracts, revenue recognition. While there are some minor miscellaneous variations, there are 2 methods of determining when and how much revenue should be recognized on a construction contract. These methods are referred to as the percentage of completion method and the completed contract method. Me personally, in my exam, I had multiple questions about the percentage of completion method. They gave me math questions, and I had to calculate that on my own. Once again, we can do that in a separate video. If somebody has any questions, definitely leave a comment, and we can have examples of that. But for now, we're gonna move along. Percentage of completion method will result in revenue recognition more quickly. All right. Completed contract method. If a contractor is unable to reasonably estimate the percentage of work performed or the total cost to complete contracts, the contractor must use the completed contract method. Okay. While the completed contract method may be used for income tax purposes for companies that have sales of less than 10 million, the percentage of completion method is the much more preferable method for accounting statement presentation. Much more preferable method. That's the most important phrase here. Under the completed contract method, no profit is recognized until the contract is fully or very nearly completed. How much completed, you ask? In general, a contract in excess of 98 or 99% completed should be recognized as complete. So remember, what they're talking about, they may ask you that for that number. They may ask you what is the percentage at which a contract can be recognized as complete, and they'll give you like 91, 95, 93, 99. You know that it has to be in excess of 98 or 99%. Page 383, overhead costs. Examples of such costs are direct labor, material, and performance bond premiums. Overhead costs will be covered in the accounting book in great detail. So I don't really want to get into it, but please definitely take a look at this section, peruse it at your leisure. There's some good information here as well. Examples of overhead. Now keep in mind, there are different examples, there are different kinds of overhead expenses. On my exam, I had questions where they asked me to list what was considered an overhead expense and what was not considered an overhead expense. You can find examples of that in this book or in the accounting book. All right, page 389, types of financial ratios. Once again, lots of highlights on this page. That means this page is important. That means you should be very familiar with it. These are the ratios: liquidity, leverage, activity, profitability. Definitions right in here. Current ratio, dividing the total current assets by the total current liabilities. Important. Quick ratio, determined by adding cash, accounts receivable, and marketable securities together and dividing by current liabilities. Also important. Leverage ratios, measure the investment of owners as compared to the financing provided by the company's creditors. Also important. Profitability ratios provide indication regarding how effectively the company is being managed. Also important. All right. Return on investment method, we're on page 394. Know what that is. The return on investment method is based on the average income divided by the average book value of the asset. All right. FICA. Know what FICA stands for. I had that on my exam. Literally, a very, very easy question. You've got an acronym. You need to know what it stands for. Federal Insurance Contribution Act. Easy question. You want questions like that. Those are great. Services provided by CPAs. The highest level of financial statement, and this is called an audit. Okay, they may ask you what is an audit and who can perform one. Question. The answer is right there. The CPA is not required to have any communication with parties external to the company being audited. A letter of still a different nature may be accompanied financial statements, which is known as compiled financial statements. These are different kinds of letters. We can move on from that. I don't think that's really a big deal. Let me see here. The following are cash management procedures. Definitely, you could take a look at these. It's not going to require a lot of information, but take a look at these. This may come up on the exam. Yada, yada, yada. Okay, so this is actually pretty good. So on page 3105, you have a glossary. This is really, really good because a lot of these terms that we had discussed in this chapter are right there. They're described. You know exactly what they mean. So if you have a question where they're really looking for just strictly a definition, you can find that here. Or if you're gonna have a hard time navigating this book because it can be a little bit tricky, you can always check out the accounting book. Like I said, if I have a question regarding a definition for any kind of financial term, the first place I would go to would be the accounting book. I just think it's easier to navigate. And easier to find all the definitions and everything else. But still, it's in here as well if you want to look for it, if you want to put a bookmark here or whatever. So it's 3105. All right, let's skip ahead. Keep going, keep going, keep going. All right. We're on page 3121, the Davis-Bacon Act, DBA, construction projects in excess of $2,000. Penalty, $10 per day per violation. Let's see here. Okay, posting the wage decision. I don't think that's anything crazy. All right. Certified payroll reports. There's some stuff in here. I don't really think any of this is that important. I have it highlighted here, but I think we could probably skip that for now. The Davis-Bacon project for at least 3 years after the project is completed. Okay, so that's payroll retention with records retention. So that the records retention is for 3 years. Working foremen and supervisors that regularly spend more than 20% of the time performing construction work and do not meet the exclusions in paragraph 2 are covered laborers and mechanics. Yeah, I don't think this is that important. At least I didn't really see any of this stuff on my exam. You may, I mean, listen, you may have a question about that, so know where that stuff is. Restitution for underpayment of wages. The employer, prime contractor, is allowed 30 days to correct underpayments. All right. And we're on page 3140. Let me see here. The contract administrator will continue attempts to locate the unfound workers for 3 years after the completion of the project. After 3 years, any amount remaining in the account for unfound workers will be credited and or forwarded by the contract administrator to HUD. That's right. All right. Department of Labor Debarment. Let me see here. Falsification of payroll. Contractors and or subcontractors that are found to have willfully falsified payroll reports, including correction certified payroll reports, may be subject to civil or criminal prosecution. Penalties may be imposed of $1,000 or 1 year in prison for each false statement. Don't lie. Otherwise, they're gonna come after you. All right, this is pretty important. We're gonna get into this. You will definitely get questions on the Circular E, okay? This is the employer's tax guide. There is a lot of information here, and you will get multiple questions from this section. I would highly recommend you read that employer's tax guide. This is not a humongous book. I mean, it's just kind of like a pamphlet that they put into the Contractor's Manual. There's a lot of information here. We're gonna highlight what I think is important, as always, but still, you know, I would recommend that you spend the time to read this section, because this is definitely the kind of section where anything is up for grabs. And there's a lot of info here. All right, so let's move along. So hiring new employees. When hiring new employees, what has to be filled out? Form I-9, Employment Eligibility Verification, okay? That's in here. We're on page 3, 158. New hire reporting. You are required to report any new employee to a designated state. New hire registry. A new employee is an employee who hasn't previously been employed by you or was previously employed by you but has been separated from such prior employment for at least 60 consecutive days. Okay? Now you also have a section about W-4 requests. Let me see here. We'll keep going to page 159. We are in the middle of the second column. Payments subject to backup withholding include interest, dividends, patronage dividends, rent, royalties, commissions, non-employee compensation, payments made in settlement of payment card or third-party network transactions, and certain other payments you make in the course of your trade or business. Okay. Record keeping, we're on page 3160. Keep all records of employment taxes for at least 4 years. Important question. Very, very highly likely that this will come up on the exam. They love that one. At least 4 years. Page 3, 161. By January, because we're now talking about the calendar, so they're talking about timelines and dates when you should file what. By January 31st, file Form 941 or Form 944. File 941 for any undeposited income, Social Security, and Medicare taxes. You may pay these taxes with Form 941 if your tax liability for the quarter is less than $2,500. If you timely deposited all taxes when due, you may file by February 10th. Now, I had this on my exam where they were literally asking me, when is it okay to file in certain scenarios? This is the question. This is the section where they were talking about. Make sure you read this and fully understand what is your responsibility to file by when. Okay. Let me see here. This is for 1099s. Furnish each employee a completed W-2 or a 1099. Now moving on. By April 30, July 31st, October 31st, and January 31st. Important. Deposit FUTA tax to the quarter, including any amount carried over from other quarters, if over $500. If 500 or less, carry it over to the next quarter. Very, very important. Possibly may come up in your exam. They're going to look for the number. They want the amount. How much when do you have to report? And if you have less than a certain amount, how much that is amount, so that you can carry it over instead of having to report. So remember, the key number here is 500. Form 941. If you timely deposited all taxes when due, you may file by May 10th, August 10th, November 10th, or February 10th, respectively. All right, who are employees? This is a common question. Generally, people in business for themselves aren't employees. Remember, people who are in business for themselves. So doctors, lawyers, veterinarians, and others in an independent trade in which they offer their service to the public are usually not employees. You may get a question where they talk about who is an employee, who is not an employee, and they will give you a bunch, and they'll tell you, you have to group them and categorize them yourself. All right. Next, we're still on page 161. If you want the IRS to determine whether a worker is an employee, file Form SS8. Remember, SS8. Next, page 166. We have a section that covers family employees. Read this. Next page, employee social security number. You are required to get each employee's name and social security number and to enter them on Form W-2. Sure, that is no surprise to you, since you probably get one already. All right. Keep going to 3170, valuation of fringe benefits. Generally, you must determine the value of fringe benefits no later than January 31st of the next year. Let's keep going. Seasonal employees, we're on page 3176. Seasonal employees and employees not currently performing services. You reasonably expect the employee to resume services within 12 months of the date of the notice. 12 months, that's key term. Let's keep going. What else do I want you to highlight? On page 3177, second column, top paragraph, an employee who submits a false W-4 may be subjected to a $500 penalty. Social Security and Medicare taxes, that's the section right here. Also, definitely read that. Let's see here. This is pretty important. On page 3178, the Social Security tax rate is 6.2%. Okay. The wage base limit is $142,800. Medicare tax is 1.45%. So the total is 2.9. Okay, 2.9% total. This section right here, important. Make sure you come back to this. Make sure you know where this information is. Additional Medicare tax withholding. In addition to the withholding Medicare tax at 1.5, you must withhold 0.9. Additional Medicare tax from the wages you pay to an employee in excess of $200,000 a calendar year. Okay. Don't really need to know that. Let's keep going. Next page, payment with your return. You may make a payment with the timely filed Form 941 or Form 944 instead of depositing without incurring a penalty. When to deposit? There are two deposit schedules, monthly and semi-weekly. Okay. Page 380, look back period. The look back period begins July 1st and ends June 30th, as shown next in Table 1. If you reported $50,000 or less in taxes for the look back period, you are a monthly scheduled depositor. If you reported more than $50,000, you are semi-weekly scheduled depositor. Make sure you know where this is. This is the section that they're talking about, and this is the table. So remember, $50,000 or less, monthly schedule. $50,000 or more, semi-weekly schedule. Very, very important. High chance of that question being on your exam. Monthly deposit schedule. During a month by the 15th day of the following month. All right, but yeah, definitely take a look at all of this. Read this section. This is important. Let me see here. Page 182, $100,000 next day deposit rule. If you accumulate $100,000 or more in taxes on any day during the monthly or semi-weekly deposit period, you must deposit the tax by the next business day. Remember, $100,000 or more, gotta deposit at the next business day. Let's keep going to the second column. Makeup date for deposit shortfall. Okay. Let me see here. Same day wire payment option. It has to be done by 8 p.m. Deposit penalties. All right, so make sure you know where this table is as well. This may come up. We're on page 3183. 2% is the penalty. Deposits made 1 to 5 days late. 6 to 15 days is 5%. Deposits made 16 or more days late, 10%, so on and so forth. So I don't want to read all of this, but definitely know the penalties, deposit penalties, and what those amounts are. All right. Trust recovery penalty. The penalty is 100% of the unpaid trust fund tax. Let me see. We're on page 3185. First column, filing form 941 or form 944. If you paid wages subject to federal income tax withholding, including the withholding on sick pay and supplemental employment benefits, Social Security, and Medicare taxes, you must file form 941. Okay. Federal unemployment tax, FUTA, whatever. We're on page 391. You're subject to FUTA tax on wages you pay employees who aren't farm workers or household workers if you paid wages of $1,500 or more in any calendar quarter. Okay. Key phrase here is $1,500 or more. The FUTA tax rate is 6%, and the tax applies to the first $7,000 you pay to each employee as wages during the year. So remember, 6% on the first $7,000. Let me see here. Generally, you can take a credit against your FUTA tax for amounts you pay into state unemployment funds. The credit may be as much as 5.4% of the taxable wage. If you're entitled to the maximum 5.4 credit, the FUTA tax rate after your credit is 0.6. Well, that makes sense because they're subtracting 5.4 from 6, so that's what's left, 0.6. All right. So once again, they're talking about the key number here is 7,000. All right, so this paragraph is pretty important. It's not just highlighted, it's also underlined. So make sure you know exactly where this is and what it says. We're on page 3191. If your FUTA tax liability for any calendar quarter is $500 or less, you don't have to deposit the tax. Instead, you may carry it forward and add it to the liability figured in the next quarter to see if you must make a deposit. If your FUTA tax liability for any calendar quarter is over $500, including any FUTA tax carried forward from an earlier quarter, you must deposit the tax. Okay? You must deposit the tax by EFT. Electronic fund transfer. All right, that's what the EFT stands for. Table 4, when to deposit the FUTA tax. There's a table. It tells you for which quarter, when it's due. Let me see here. Okay. Yes. All right. So that's it for chapter 3. A lot of information was covered. Like I said, I would say that this is the financial aspect of the test is pretty important, and you should definitely expect to see numerous questions on your exam. But just understand that in order to answer the questions that come up with respect to the finances and accounting, you do have options. That information can come either from chapter 3 or from the accounting book. So I would spend some time going over this section. I would specifically cover what I think is most important in this particular chapter, chapter 3, is the information from Circular E, which is the tax information, because that information is specific to this book. You're not really going to see a lot of tax information in the accounting book. So the first section of this of this chapter deals really with accounting, and I think your accounting book will do a much better job navigating you to the correct answers. But with respect to the taxes and the information as far as like scheduling and everything that's in Circular E, I think that requires you to spend a little bit of time. Don't skimp over that section. Make sure you read the Circular E. It's not that huge of a section. There is a lot of information. I know it's very, very small print, and I know it's boring stuff, but there are a lot of possible questions that can come from that section. So don't ignore it, all right? Remember what I said before in my previous videos. You've got to make sure that you respect this test, okay? Respect this test. Make sure you spend the time. Don't just ignore whole swaths of the chapter. Spend some time, read it, go over it, highlight it, make sure you know where everything is. Thank you for joining me once again, and I look forward to seeing you in the next video. If, like I said before, if you got any questions or comments, definitely feel free to reach out, and I will do my best to answer any questions that you may have. Thank you.